Good morning, small players. Welcome to another episode of Pre-Market Scanning, where we go over our morning gappers and we analyze them for support and resistance level. If you are new to trading, these morning videos are going to be too advanced for you. They're not meant for new traders. They're meant for students from our classroom that take the course and need some help determining levels of support and resistance while they're starting to practice with fake money, as well as traders that maybe have been struggling to be consistent and to find their strategy that works that they can replicate all over and over again. So they're trying to learn something from other traders. If you're new, it's going to sound like I'm speaking a foreign language, and that's not because of my accent. Okay, so this morning we have some stocks in the scanner, not too many. I did add VXX on my watch list because we were trading it yesterday because the market had increased volatility due to the first confirmed Omicron case in the United States. So VXX is one of the ETNs that follows the VIX, which is the volatility index. Another one is UVIX, UEXY, which is 2 times leveraged, so it moves twice as much as the VIX. I already find trading the VIX intraday tricky. Most of the time VIX is used, VXX really, is used to hedge your position. So when the market has some increased volatility, you buy some VIX, and then the gains from VXX help you decrease the losses you have on your positions in general due to the general market pullback. Trading it intraday is a little tricky because you have to trade it along with the SPY chart, and every time the SPY makes a move downwards, generally VXX will make a move upwards. But then any little move SPY makes is twice as aggressive. I don't know why it's a little slow this morning. Twice as aggressive in UVIXY, so it makes it even more difficult to trade intraday. Better for hedging if you are absolutely certain, of the hedge, because the hedge is pretty much insurance. So while you want to pay for insurance, you also don't want to overpay for it for things that you don't need, because then it eats into your household budget. Same thing with paying for insurance in trading and investing. It will eat into your gains if you pay for insurance constantly, and if you pay for it when you don't need it. So you should just save it for times that you do. So anyway, they're a little more complicated to trade. And I personally, when I trade intraday, I only trade the VXX. Another one is SQQ, which is the inverse of the NASDAQ index. So it's another ETN, which we can actually, that's fine. We can trade that. That one's not double leveraged. Okay, so now let's go back to our small caps. The first one is ABUS. We traded this baby yesterday. I forget what this is what the news was. They have some new hepatitis B treatment. You guys have noticed by now, if you have been watching these morning sessions, a lot of the small caps that we trade tend to be pharmaceutical companies. No really particular reason. It's just that for us, we look for morning gappers, which are stocks that are set out to open higher than the previous trading day, have increased average volume, meaning there are more shares traded today than there are in general, and that's normally due to some piece of news. And it's important because we need a catalyst to justify the move. And then they also, we target low floaters, which are stocks with a low number of outstanding shares, so they're easier to move, and generally low institutional ownership, so they're harder to, manipulate by one institution. So with all of that being said, because we need a catalyst and we need increased buying, it just so happens that oftentimes it's pharmaceutical companies, because I don't know the stats on this, but I'd be willing to bet that they are the stocks with the most, they're the industry the most catalyst, because there's constantly something. They came up with a new drug. The new drug is going through one trial. Their new drug is going through another trial. There are some results that they received from a trial. They got some approval, one of the many approvals, and they got another approval, etc. So there's always something going on, and they happen to pop on scanner frequently. Okay, all that said, with this one, the chart is not that great. It's obviously, obvious it has a triple top here. What is this? 542, 545. So triple top in the 545 area. I'm calling it 5.5 because it's a psychological level. So a break above 5.5 could potentially cause a squeeze because it's obvious there were a lot of sellers there. So I'd be interested in that level. Obviously, when it broke below VWAP, short sellers destroyed it very sharply. Some traders, some reversal traders could have traded this bounce because it was strong resistance before. So that's one bounce potential. If it tests support the second time, you guys know from watching these videos, the more we test these levels, the weaker they are. So second test of support is going to be weaker than first. So second test of support may fail. We do trade second tests of support. Sometimes they have less likelihood of succeeding compared to the first, but are still, in some cases, valid trades, just riskier trades. Third tests of support are short setups, so us as long bias traders, we don't trade those. So if it tests it twice and fails, then we can look for a bounce here for a reversal trade for reversal traders. I personally, although I trade reversals, the majority of the time, the reversal that I will trade is a bounce on EMA 20 on 5-minute chart. The EMA 20 line here is this blue line, and it's really sort of at the same spot as VWAP, so that wouldn't work here. So I personally don't trade reversals below indicators. It's very rare that I do. It's pretty much only if it's like the most obvious stock of the day with 5 times the volume than the stock after it, with some crazy news, etc. This one's already a second day runner. So second day runners are more difficult for long bias traders than they are for short bias traders. So I will not get into a difficult trade, and reversals for me personally are more difficult than breakouts, and that could sometimes be a personal choice. So for me, I would just let short sellers continue to destroy it and make their money. And if it breaks above 551, then I will enter, because in that case, I know they will start getting squeezed and start losing momentum, so then I can maybe go back to testing the high of the yesterday. But until then, I'm just letting them make their money. Another reminder, in the pre-market session, these alerts don't work, so you have to go back and look at the stock yourself. This one looks like it just popped on the scanner. Merger, that's another big catalyst for these small caps because they're all small companies. Every now and then there will be some rumors about them merging with another company. News about them merging with another company, or other times, getting acquired by a bigger company. Those are all very big news for these. So a valid catalyst for sure. This right now is breaking a 5-minute flag. It does, it seems to be rejecting it, but there's that increase in volume that we want to see. It's not quite the double volume yet. Let's look at the 1-minute chart. It fulfills my test here of having a double volume on the breakout, meaning the volume on the candle breaking the flag is twice the volume of the previous candle, showing that traders are buying that breakout, or short sellers are getting squeezed. Whatever the case may be, we're seeing that people are buying that breakout. So for us right now, the stock just popped up on the scanner. The high of this candle is 1301. So we know the break of flag was 1302. It seems like 1315 rejected, and it's sort of consolidating. There's no spread really. So for me now, I would say, well, I missed the breakout, which, not a bad thing because it was a fake out. However, I see long bias traders have strength here. So I don't want to disregard it even though it's pulling back. So I will even say I can even get it cheaper than the people that bought the breakout because it's now pulling back, but it's still valid, still holding this level of 1275. See, it's rejection on this candle, and then these two candles have the opening and closing price there. So it's a key level. That was a weird thing on the, I don't know if you guys noticed, but on level 2, the bid was higher than the ask for a couple seconds. It really freaked me out. Something's happening, so it seems like short sellers are really going for it, and they're going for it because we broke below 75, the level that we were just discussing. So on break below that, the whole level 2 sort of got crazy. So 75 reclaim for me on this one personally would be a trade because it's a key level. We can also trade a VWAP bounce. I mean, it's not that far along. And then I want to say break above 13.5 just to be safe, because it seems like this here was break above, we can call this, what is the high of this candle? 13.10, break, above 13.15, got rejected after 1 cent. So short sells are very strong up here. There's a lot of congestion in the 13.2 area, but the high of this candle is 13.35. So the most obvious stop area for them, I would say, is 13.5. So we can just set that up for, I just want to see my batteries. I thought I charged my computer. I'm sitting in my conference room with pretty city views, so I can take pictures for you guys for Instagram and post motivational quotes on top of them. Okay, the next one, this is a warrant of the same stock, so I'm disregarding that. I don't really trade warrants. Okay, this one had good news, but it sold off. Interesting. So they had a patent granted, which is good news. So why it sold off, I don't know, but we can trade a dead cat bounce on this. We like those setups. So right now, this is a break of 5-minute flag that's not doing much. I would take a bounce on this level again. What is this? 275. Sort of tested it a couple times already though, so that's probably not a safe trade anymore. Maybe let's say break above 280, well, 285 just to be safe, because it's a psychological level. Yes, I know, you will unplug. I charged you. I probably didn't have the charger and ready the correct way. Okay. This one, break above 8, is going to be a trade. I'm just going to try and do this very quick for the next couple ones that have some volume. The rest are not that interesting. I like this chart because it has a lot of room to higher day. We just need to break above 8 and I'll enter it. I will not touch it before. This one is consolidating on VWAP. A bounce on this level of 38.4 or VWAP would be a trade. And on these, the volume's too low. If the volume picks up, we can worry about it. CNTX, because we traded it yesterday, it's still on a watch list. I'd keep an eye on this for a dead cat bounce setup. Still a little early in the morning, obviously has no volume, but wait, it's private placement. So I'm probably not even interested in dead cat bounce. We talked yesterday about direct offering, so this one dropped it, so it's, I don't know, short sellers would probably destroy it, but we'll see once it opens. If it picks up volume and if it's obvious where short sellers are, we can always mark the chart for a squeeze level, because, we need shorts for massive moves. They're the ones that help us have the squeezes, and we love trading squeezes. Okay, guys, that's it for this morning. Let me go get my charger and trade in the chat room with our traders. Go to smallplayers.com/programs and hit Trade with Us Live so you can participate in the chat room trading and see all of our trades before we take them. Talk soon. Happy trading.